Hey, how's it going, everyone? My name is Derek Afasi. I'm the owner of Afasi Financial Group, and today's topic I want to discuss: what is mortgage life insurance, and is it important for a specific situation? Mortgage life insurance is probably the single most important type of term life insurance out there. And essentially, whenever I say the word term, what this means is, let's say that you just purchase a home and you have a $500,000 mortgage, and you have that mortgage for 30 years. Well, what happens is you could do one of two different ways. You could either tie this exact mortgage to the dollar amount to a certain term life insurance policy, understanding that, God forbid, the breadwinner, one of the spouses in the relationship, you typically, whenever term life insurance is purchased, it's purchased on both individuals, so both spouses, and what it does is it gives coverage for those amount of years that mortgage is supposed to be, that mortgage debt is supposed to be in place. So if you have a $500,000 mortgage for 30 years, then you understand after the 30th year there's going to be $0 of debt left. If something happens in year 5, well, you're going to have a certain number that has to be paid off to the mortgage company to make sure that you're completely debt-free, of that mortgage. So essentially, what happens is individuals want to purchase mortgage life insurance, understanding that if they pass away, they have an unforeseen accident and they pass away prematurely, they want to make sure that the spouse is covered and the house would then be paid off in the process. So, let's say if you have right now you might have 10 years left on your mortgage, you might want to possess 10-year term life insurance for that specific dollar amount, so that you understand if something happens within those 10 years, that mortgage amount would then get paid, and it will get paid to your beneficiary in a tax-free lump sum, and they could then take that money and then pay off the remaining part of the mortgage. Now, that's the most basic terms of mortgage life insurance. That's exactly what it is. It's just, you're essentially just utilizing a term life insurance policy and you're correlating it specifically to your mortgage. But some companies also have something known as decreasing term life insurance, where you might have a 30-year term life insurance policy, but for 500, let's say you take it out for 500,000, but after every 5 years it might decrease by X amount of thousands of dollars, and essentially you have less and less, because you understand that if you're paying for your mortgage for 30 years, after 5 years, after 10 years, this number is going to be a cheaper amount. So there's a couple different ways to do that. Now, one of the things that I definitely recommend is you give us a call. You give a 1-800 number a call. It's 1-800-566-1002, because we utilize hundreds of the top mortgage life insurance carriers in your specific area. So you could either visit our website, retiresharp.com, or you could obviously give us a phone call 24 hours a day, 7 days a week, and you'll have a specialist, a mortgage life insurance specialist, to kind of help you out, to kind of distinguish what exactly is the proper amount, what is the specific amount, if you only want it tied to your mortgage. If you have other types of life insurance needs, obviously we could match that. We could place that formula within your term life insurance plan. But the mortgage life insurance, it definitely serves its purpose, and I believe in it heavily, and I really think that you guys should at least give us a call, see if it's up your alley, see exactly what that price would be, and we could get you set up within minutes. So once again, 1-800-566-1002. Thanks, guys.